Validation, now I validate myself. Building inner strength, putting doubt up on the shelf. No more unnecessary drama, no more wasted time. Climbing higher constantly, making my own climb. Standing on higher ground, where excellence is found. My potential knows no bounds. Raising the bar, breaking ground. My network is my net worth. Choose your company wise. Surround yourself with eagles, not with sheep in disguise. Every interaction is a reflection of my brand. Quality over quantity, that's my personal command. Standing on higher ground, where excellence is found. My potential knows no bounds. Raising the bar, breaking ground. Whoa. I'm not just living, I'm manifesting my vision. Cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield. To mediocrity and chaos, I will never yield. I'm manifesting my vision, cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield. To mediocrity and chaos, I will never yield. Standing on higher ground, where excellence is found. My potential knows no bounds. Raising the bar, breaking ground. I'm not just living, I'm manifesting my vision. Cutting through limitations with surgical precision. My expectations are my compass, my respect is my shield. To mediocrity and chaos, I will never yield.
How you doing, ladies and gentlemen? Welcome to This and That. I'm your host, Xander, where we're talking about this, that, and everything in between. Today, we got a pretty straight up week this week, man. Every time I get ready to do something, we got a whole nother breaking news situation happening. So just before I could set up tomorrow's show, Mr. Pibbs hit me up and let me know that they're actually going into effect with dismantling the educational platform. So I got to talk about that tomorrow. Today, we are hitting those overnight stocks that blew up over the overnight from Monday night to Tuesday night, and how they leveled off after that. I want to be able to talk to you guys about that so that we can kind of get a better understanding of those stock options, because what was his name? DJP1 came on and decided to make it a point to let us know that there was a 20% increase after the stock market closed while we were live on the podcast, and asked me what I knew about it. And you know me, I ain't know nothing about it because I was already telling y'all about something that was more important than that. So I had to go and do my research and figure it out before I came and talked about it on the show. I took my time to do my due diligence. Another reason why we're not here on time today. We operate on CP time though, but we are supposed to be live 7 nights a week, 10 o'clock, 30 minutes ago. Central Standard Time, 11 o'clock Eastern Time, 7 o'clock California time, as California continues to burn down. Now is the point of the show. I can tell you I told you so, because about 2 or 3 weeks ago, I told you it was going to be the first or second week of February before the fire went out. It is still burning. Told you so. Now, as I continue to foreshadow life the way The Simpsons does with American history, I just want to keep telling you guys that as you like and subscribe and you join this and that and you follow us on a daily basis, you will get the inside scoop of what's happening, what it's going to do for our daily lives. And then when it does come to fruition, I'll be able to remind you, I told you so. So I'm encouraging you guys to make sure that you guys like and subscribe and swing by as often as possible every day of the week, if not most days out of the week, to kind of get a good glimpse of what we are going to be dealing with for 2025. Now, I want to make sure that we pull up here in the, see, look at that. Just shifted. All right, here we go. Join me as we figure out why these tech stocks just skyrocketed overnight and see if we can make some smart moves before it's too late. Now, keep in mind the inside scoop that happened the evening before those stocks blew up. Probably everybody who's anybody should have did whatever that was. And because you didn't, you missed it. The 20% boom that happened Monday night technically swung through and settled out Tuesday morning. And I got to be honest with you, some of them are on a decline today, 48 hours later. So if you didn't catch it while you were supposed to catch it, you kind of missed out on it. But we're going to be talking about ways to get in and stay in for moderate to long period of time, aiming for positive returns over a long period of time based on these high-tech investments. So if you're an investor or just a tech enthusiast, and you're probably aware of the crazy overnight spikes that happened over the past week, these sudden movements can be thrilling, but it's also going to be terrifying for those individuals, especially when you've seen the stock plummet 48 hours later. So as these particular shifts can make or break your investment portfolio, because if you sold before the spike happened, you feel like you lost out on 20% that you could have made if you would have held out a little bit longer. If you bought in after the spike happened and now you're going to experience a decline, you're going to feel bad about that as well. So you got to remember, the concept of overnight tech stock spikes is highly relevant to investors and tech enthusiasts, as it can bring about immense opportunities for growth, but also significant risks. The volatility and unpredictability are inherited characteristics of tech spikes. And you're making these high risk, high reward investments. Many investors have lost significant amounts of money by betting on the wrong tech stock, while others have made fortunes by making the right moves at the right time. So the risk involved in investing in tech stocks are definitely real, and it's essential to understand these risks before putting your money on the line. So investing in tech stocks requires a deep understanding of the market, the companies, and their products. And apparently, a lot of the CEOs and board members, because when scandals happen and board members resign, usually that's when you start seeing the stocks of a specific company start to plummet. And you're going to be looking at a healthy dose of luck that's going to be involved in your work, unless you're Martha Stewart and you have an inside track on when to get rid of your shares before the stock is about to take a dump. But if you make too good of a move too quick, everybody's going to expect the fact that you were hedging in some way, shape, or form. But tech stocks can be heavily influenced by the market trends, technological advancements, and even social media hype. All that hype that happened on Monday about the 20% boom in the middle of our show. So many people who would have been trying to buy into that stock first thing in the morning, watching that 20 to 22% increase by 2-3 a.m. would have been trying to buy into that stock, while everybody who experienced that 20% increase would have been selling the stock. Now, a single tweet from a prominent figure can send a tech stock soaring, or in some situations, plummeting, making it difficult to predict what certainty will happen next. Now, furthermore, the tech industry is constantly evolving with new companies and products emerging all the time, which can disrupt the market and create new opportunities for growth. Sheer speed and unpredictability of tech industries make it challenging to keep up with the latest developments and make informed investment decisions. Investing in tech stocks can be a thrilling experience, but it's essential to approach it with caution and a clear understanding of the risks involved. Many investors have been burned by investing in tech stocks, and these stocks are the ones that seem promising, but ultimately fail to deliver. The key to success lies in doing your research, staying up to date with the market trends, and being prepared to adapt to changing circumstances by taking a thoughtful and informed approach to investing in tech stocks so that you can minimize your risk and maximize your potential for growth. Now, the rewards can be substantial, but the risks are real, and it's critical to be aware of all of the risks before you invest. Now, the recent surge in tech stocks has been driven by a range of factors, including advancements of artificial intelligence, the growth of Internet of Things, and the increased demand for cloud computing. Companies like Amazon, Microsoft, and Google have been at the forefront of these developments, and their stocks have reflected this. However, other companies such as Tesla and Netflix have seen significant growth driven by their innovative products and services. The examples of these companies highlight the potential for growth in the tech industry, but also the risk and challenges that comes with investing in this space. Companies like NVIDIA and AMD have also seen significant growth in recent times, driven by the increasing demand for graphics processing units and other specialized hardware. The growth of the gaming industry, as well as the emergence of new technologies like virtual and augmented reality, has created new opportunities for these companies to expand their product offerings and reach new customers. The stocks of these companies have reflected this growth, with many investors seeking to capitalize on the potential for further expansion. The success of these companies highlights the importance of innovation and adaptability in the tech industry. The recent surge in tech stock has been driven by the growth of emerging technologies like blockchain and cybersecurity, which is what we were talking about earlier this week. And companies like Palo Alto Networks and CyberArk have seen significant growth driven by the increased demand for secure and reliable technology solutions. So the emergence of new technologies and innovation has created new opportunities for growth and investment, but also new challenges and risks. By understanding these trends and developments, investors can make more informed decisions and capitalize on the potential for growth in the tech industry. Now, the importance of staying up to date with the latest developments cannot be overstated enough, as the tech industry is constantly evolving. So the growth of the tech industry has also been driven by the increasing demand for digital transformations and the adaptation of cloud-based services. So companies like Salesforce and Workday have seen significant growth by driven increases in demands for customer relationship management and human capital management solutions. So the emergence of new technologies and innovations has created new opportunities for growth and investment, but it also continues to bring even more challenges and risks. Now, I've said that there are challenges and risks in investing in this stuff probably 20 times in the last 15 minutes. So don't you come back and tell me that you put your money where my mouth was and come to find out that when I told you to be careful where you put your money, you didn't listen. And it's my fault. It ain't my fault. I keep telling you there are challenges behind this and there are risks. And we're about to step into a lot of it to talk about the big boom that happened, but the product is still not where it could have been versus what we would expect to see on the product. So understanding these trends and developments, investors can make more informed decisions, which is why you got to do a lot more research on the history of the company, what they're working on, the success of the product, the output, release dates. You got to really look into these things. And when you're looking at the potential growth for the tech industry, you're able to analyze the success of these companies, which highlights the importance of innovation and adaptability in that tech industry. So the key factors contributing to the sudden surge in tech stocks are varied and complex. But earnings reports, innovations, and major partnerships have all played roles in driving the growth of tech stocks. So the recent surge in tech stocks has been driven by a range of factors, including the growth of emerging technologies, the increasing demand for digital transformations, and the adaptations of that cloud-based service that I mentioned to you earlier. But by understanding these factors and how these factors are playing a role in today's society, how these factors impact consumer purchase and consumer utilization, you will be able to factor in how investors can make more informed decisions and capitalize on any potential observations for growth in the tech industry, because right now we're in tax season. Okay. So anybody who's getting paid taxes early, about to start spending some money. Anybody who's going to be getting their taxes in the mail in the next couple of weeks, direct deposit in the next couple of weeks. February is the month. Car sales is going to start going up. Gaming systems is going to start going up. People are going to start wasting their tax money, because instead of people listening to me, taking that extra tax return money and putting it into a stocks, bond, or real estate situation, you would be able to make money for you if you did that. Instead, you are putting more time and effort into the extra disposable income that you have. You're putting that time and effort into disposing of that income. I would never do that. I would live off of the revenue that is generated from my investment. Interesting enough that I say that, because while we think about the importance of staying up to date with the latest developments, which I just cannot continue to overstate this, as the tech industry continues to evolve, we're going to look at our investments in the tech industry is going to be a lot different than our investments in REITs and other such cash stocks that would be paying us dividends on a regular basis. Innovation and technological advancements have been the major driver of growth in the tech industry. Companies that have been able to innovate and adapt to changing circumstances have been rewarded with significant growth in their investments. Now, the emergence of those new technologies and innovation that has created new opportunities for growth and investment still increase the quantity of challenges that we have with our decision-making process on investments, because you might shift from one project to the next, thinking that that particular project is going to do better than the next. And you also have the risk that if you stick with the product that has been around for a while, the other product might trend. But the trending product may not trend for very long, and the lasting product may increase in value because the lasting product probably was developed more effectively. Again, I tell you, there's risk. So I'm keep telling you over and over again that you got to pay attention to these trends in the development. You got to pay attention to the information that you're getting, and then make good decisions about the capitalization of the potential investments and innovations that are happening in your industry. Now, Fireball, could you legally avoid taxes by not liquidating the stock into cash? No. If you have a stock that is paying dividends, even if you don't receive those dividends, they can report to the IRS that you have received compensation that just wasn't distributed to you. That's the simplest way to explain it, where you can still be taxed on, because it's called reinvesting. Now, if you put your money into a stock option that's not paying dividends, if you don't take the money out, then yes, you can avoid paying taxes on that. But depending on what kind of stock you have and what kind of tax agent you have, you could get taxed on the increase in value of the stock option, because that, of course, could be a potential profit for you. So you got to pay attention to when you start doing complex taxes with stocks and bonds and REITs and other investment. You might want to look into getting yourself a CPA to help you out with that, which is why I was telling you about Joe Mastrano, who helps you guys out with taxes, saves you over $10,000 per person on their taxes every year. And again, if you guys got some information that you want answers to, you just send me a message in the message box, and I'll send you guys the information for Joe Mastrano, and y'all be able to let him know that I told you guys on this and that, and he'll give you an additional 10% discount on your taxes. So while some tax agents charge anywhere between $100 and $300, you're looking at a tax agent giving you 10% off, which is a significant quantity of money for some tax agents. But keep in mind, professionals that do your taxes is a tax deduction. So just note, it's not going to hurt you to run it by a tax agent, because they get paid out of your taxes to do your taxes. So either the IRS would have took it, or the tax agent's going to take it. One way or another, it's a cost of doing business. But if you're not paying the United States government after everything they took out of your check, that's a plus. You get money back, that's a plus, plus, plus. So when we're looking at the success of companies like Amazon and Google, highlighting the importance of their innovations and adaptability in the tech industry, we look at the major partnerships and collaborations that have also played a significant role in driving the growth of tech stocks. So companies that have been able to form strategic partnerships and collaborations have been able to expand their product offering and reach to customers, and the new growth of those tech industries has been driven by the increasing demand for the digital transformations and adaptations and cloud-based services that those companies provide. And by understanding that trend, you can stay ahead of the development, and as an investor, you can make a more informed decision, and you're going to again be able to capitalize on more potential for increased growth, and you'll be able to navigate yourself through the tech industry. When we start looking at the earnings reports have also been a major factor in driving the growth of the tech stocks, because as soon as what was it, PLTR, I think it was called, put their reports up after the market closed on Monday, 22% increase. The companies that have been able to deliver strong earnings reports have been rewarded with significant growth and investment. The recent surge in tech stocks have been driven by a range of factors, including the growth of emerging technologies and the increased demand for digital transformations and the adoption of those cloud-based services, where we would be able to experience a lot more regularly accessible features as consumers than what was once available. Now, I tell you all the time to put your money where you put yourself, because like if you're investing in stocks like Microsoft, then if you're using Microsoft products, you're reaping the rewards of your efforts, of your financial investments. But such companies like Microsoft and Alphabet highlights more importance of strong earnings reports in driving the growth and investments. So let's take a look at some of the AI technology stocks that experienced significant gains overnight. Because we had Google, as we told you before, their earnings report and capital expenditure plans sparked a rally in the AI related stocks. The company announced plans to spend $75 billion in capital, and that those capital expenditures were supposed to be over the course of the year, with a major focus on AI data centers. Google's parent company, Alphabet, reported its quarter four 2024 earnings and that's going to be February 4th, which was yesterday, which provided insight on the company's performance leading up to quarter one in 2025. Alphabet reported revenue of $96.5 billion, which is a 12% increase year over year, but slightly below the expected $96.6 billion. So the company's profit reached the $26.5 billion, which is a 28% increase that marginally exceeded analysis predictions. So they're doing a little bit better than people would have hoped as they threw their money down on the situation. And Google Cloud's revenue hit $11.95 billion, which is a 30% increase year over year, but fell short of the expected $12.2 billion, which is literally $0.07 billion less than what they were hoping for, right? Billions. We be getting mad because somebody stepped on our quarter. These people talking about billions. Now, Google's search engine generated $54 billion in revenue during quarter four, surpassing the analyst expectations of $53.4 billion. And Alphabet pays an annual dividend of 80 cents per share, with a quarterly payment of about 20 cents per share. And as of February 1st, Alphabet dividend yields was about 0.39%, which is less than 0.5%, which is less than half a penny for every dollar that you put down. Think about that. So that's like 56 cents on every $100 that you put down, which is less than the interest rates that's being offered from an average bank, because the average bank is offering 0.62 or 0.64% interest on your cash money. So the company's dividends payout ratio is 10.61% of earnings and 11.12% of cash flow, and 10%, almost 11% of $95 billion. That's a lot of money. Okay. That's $9.5 billion of payouts. But based on previous payment schedules, the next quarterly dividend of 20 cents per share is expected to be paid in March of 2025, although the exact date has not been announced yet. Now, Big Bear AI, BBAI, saw a dramatic increase of approximately 40% after announcing a new contract with the Department of Defense for AI-powered decision intelligence solutions, which, let's just back up, because the Department of Defense is going to have AI-powered machinery that has the intelligence to make decisions and solve problems. Sarah Jane Chronicles, Terminator 1, Terminator 2. I'm just throwing it out there. They're headed down a dark road. But Big Bear AI jumped on it. Even though Big Bear has not yet released its earnings report for quarter one of 2025, based on available information, we can provide some insight where upcoming earnings dates for Big Bear AI is estimated to report its quarter one earnings on or before March 6th of 2025, before the market opens. In quarter three of 2024, Big Bear reported an EPA of a loss of 5 cents, beating analyst estimations of a loss of 7%, which is a 2% increase in comparison to their expected loss. Revenue for that quarter was $41.51 million, which was up 22.1% year over year, but below the expectations of $45.04 million. So the company issued revenue guidance of $165 million to $185 million for the full year of 2024. Now, excuse me, for quarter one of 2025, analysts estimated an EPS of 5% loss as of January 31st. Big Bear's Holdings has a dividend yield of 0% because Big Bear does not have a history of paying dividends, and there is no indication that Big Bear plans to initiate dividend payments in the near future. So while you could be looking at a very high value stock that's putting out very high increases in the value of the stock, you only make money off the stock when you sell it higher than what you bought it, because it does not pay you to hold that stock. You hold that stock until you're ready to sell that stock. That's where people lose their minds, because if the stock was high all year, then the day you go to sell it, it tanks. All that money you've been sitting on gone. It'll make you want to pull your hair out. It'll make you want to go to MC Hammer House and steal the other gold toilet that didn't get stolen last time. NVIDIA, what is that? NVIDIA, their shares rose by 4.5%, benefiting from the overall increase in demand for the AI computing despite competition from custom chips. NVIDIA reported exceptional financial results for the first quarter of the fiscal year 2025, which ended on April 28th of 2024. And the revenue they received was around about $26 billion, which is up 18% from the previous quarter. And that is 262% increase year over year. Earnings per share was about $5.98, which is up 21% from the previous quarter and 629% year over year. So when you're looking at it, it has a 629% increase. You're thinking, wow, that's a huge increase, but it's a $6 increase on the overall price of the stock in the past 12 months per share. Now, they're looking at a non-GAAP EPS is $6.12, upward of 19% from the previous quarter, which is, again, 461% year over year. And the data center revenue is put at $22.6 billion, which the data center is part of NVIDIA. And that's going to be 23% up from its previous quarter, which is 427 year over year, where their gross margins are going to be about 78.4%, which is up 2.4% higher from the previous quarter. So 2.4 points higher than the previous quarter. Everyone's on an increase up until yesterday. And that's going to cause a lot of people who don't know squat about tech to throw money down into tech, because they're going to be experiencing the profits of tech. Now, regarding dividend distribution for quarter one of 2025, the dividend increase for NVIDIA announces a 150% increase in the quarterly cash dividends, where the new dividend amount is 1 cent per share on a post-split basis. And the stock split that NVIDIA implemented was a 10-for-1 forward stock split that went into effect June 7th of 2024. And based on the new quarterly dividends, the expected annual dividend payout for 2025 would be 16 cents per share, where a 10-for-1 forward stock split is when a company divides its existing share into 10 new shares, simultaneously reducing the price per share to 1/10 of its previous value, and the total value of a investor's holdings remains constant. where if you put down $1,000 worth of shares, you still have $1,000 worth of shares. But if you had 10 shares worth $1,000, they just divided all of your shares by 10. So now you're going to have 100 shares worth $100. That's how they do it. So the dividend yield is approximately 0.09% based on the current stock price, and Nvidia's strong financial performance, particularly in its data center segment, has been driven by high demand for its AI related products, especially the product Hopper GPUs. So the company expects this trend to continue, projecting in Q2 fiscal year 2025 the revenue of $28 billion plus or minus 2% of that. Marvel and Vertiv also experienced significant gains, with Vertiv up 7% due to its liquid cooling solutions used in NVIDIA's Blackwell system and other custom chips. Notice how these two tech companies came together and made some software, and their stocks are up because they're collaborating instead of fighting against each other. And Vertiv Holdings have a reported in Q1 earnings increase, where Marvel's technology revenue is $1.16 billion, down 12% year over year, with a net loss of $215.6 billion and a 28% increase in loss compared to Q1 of 2024. Earnings per share is 25 cents loss, missing analysis expectations by 13%. The data center division experienced an 87% year over year increase in revenue, reaching $816 million, and Marvel still does not pay dividends, as it typically reinvests earnings into the business for growth. Vertiv Holdings, partnering with both Marvel and NVIDIA. Vertiv Holdings has $1.63 billion, $1.639 billion, which is, like, if you rounded it up, almost 1.7, and it's slightly above the estimated $1.623 billion, where their earnings per share is actually not reported yet, but its estimate is to be around 37 cents a share. Now, the earnings release date is supposed to be February 12th before the market opens, where Vertex Holdings still does not currently pay those dividends. But most companies facing different market conditions, we can tell that Marvel experiences strong growth in its AI-related products and data center segments, but struggled in other divisions, whereas Vertiv has shown consistent growth, with its stock prices increasing by 7% to $119.04 in the most recent trading sessions. And while we look ahead, Marvel anticipates an 8% sequential increase in revenue for Q2 2025, driven by ramping customer AI silicon, and Vertiv's future performance will be clearer after their upcoming earnings release. Now, SouthHound is another AI system, and their stock price is much lower than everybody else's. Their stock price is about $15.81 as of the market closing on February 5th, 2025. And I think the market closed today at about 4 or 5 o'clock Eastern Standard Time, which would have been like 3 or 4 o'clock Central Time, which would have been like 1 or 2 o'clock California time. So if you're trying to run the stock market from California, you got to get your behind up at like 3:30, 4 o'clock in the morning, drink you some coffee and try to figure this shit out. Now, SouthHound AI has seen a 250% increase since October 1st of 2024, with dividends per share still at $0 per share, because SouthHound, like other countries or other companies, also does not currently pay dividends. The company has a dividend yield of 0% and has no history of dividend payments, because most tech companies take all of their money and put it into the development of more products. So if you are trying to put your money into something that's going to continue to give you a return, you're not going to be able to put it into a company that does not pay dividends. So you got to pay attention to what the stock is doing. You can't just go grab one because it's got this really awesome 260% increase kind of scenario. Because if you're not getting paid 260% of the value of the share, or you're wasting your time. If I'm getting 250% of the share and the stock is $200, I got no problem with buying 10 of those or buy 100 of those if I got the money for it, so that I can come back with 2 times or 3 times more than what I put down. Yeah. But just to run out there and just say, oh, I'm just going to go grab a stock just for the sake of, nah, that's not going to work. You got pitfalls involved. Now, Tempest AI has not yet released its official Q1 2025's earning report either. However, based on available information, Tempest AI was expected to report in Q1's earnings Monday, which was 2 days ago. Well, we got like 45 minutes yet. By the time we finish the show, it'll be 3 days ago. And in Q1 earnings estimate, the analysis of a loss of 45 cents per share for Q1. And Zach Consensus estimates for Q1 in 2025, the period ending 12/24/2024, is negative 14 cents per share. And for Q1 of 2025, Tempest AI has provided revenue guidance of $858 million to $862 million. As for the full year-over-year performance, the preliminary revenue of approximately $693 million is represented by about 30% growth year-over-year, where Q4 2024 revenue of approximately $200 million held a 35% increase for year over year. So we're looking at lower increases. So the money, and funny, if the money is not increasing as fast as it used to, that's called a loss. I don't understand why they do that, but they call that a loss because it's no longer getting what it used to get. That's crazy. But regarding dividend distributions, like most of the tech companies we've invested today, Tempest AI does not currently pay those dividends. As of January 31st of 2025, Tempest AI's dividend yield is 0%, and there are no indications that Tempest AI plans to initiate dividend payments in the near future. Now, Tempest AI, as a growth focused AI and genomic company, they're prioritizing reinvestment in the business rather than distributing dividends. So while it's probably a good idea to put your money into technology, you got to understand that when you put your money into certain technologies, you're not getting that money back. The company continues to show strong revenue growth and is working towards improving its adjusted EBITDAs. And that's going to be some of the things that helps with our decision-making process. When I stressed it to you guys over and over and over again for the first 45 minutes of the show, that we've got to know as much about what we're about to invest in as possible so that we can feel confident about our decision. I got to tell you, sometimes, such as Palantir Technologies, PLTR, has a massive boom. And if you were still in there when it happened, you experienced a boom. Now, their shares jumped after the company provided a full year revenue forecast exceeding the analysis estimates, citing untamed organic growth in demand for its AI software. Now, Palantir Technology has recently released its earnings guidance for Q1 2025 and the full year. The Q1 2025 revenue guidance is $858 million to $862 million, significantly above the analysis census of $797.85 million. And the full year, I had to look back, y'all, because I was like, wait, were we talking about millions or billions? We're talking about millions. The full year in 2025 revenue guidance is $3.714 billion to $3.757 billion, exceeding analysis expectations of $3.5 billion. So as opposed to other companies that were not meeting the expectations, PLTR is definitely exceeding the expectations of performance. And they are beating the analyst forecast by $52 million. The adjusted EPS is 14 cents on a dollar, beating the expectations by 0.3%. Now, the growth drivers seem to be strong demands for AI solutions, particularly the artificial intelligence platforms, and significant growth in commercial revenue, which is 64% increased, and the U.S. government sales, which is 45% increased. Regarding dividend distribution, Palantir Technologies also currently does not pay dividends, and as of February 4th of 2025, PLTR's dividend yields is still $0. So the company has not declared any dividends recently and is not expected to initiate dividend payments in the near future, where dividend payout ratios are still $0 for both the fiscal year and the quarter ending in December 2024. Days later, after news went crazy about the short-lived spike in their product, in their stocks, the values for the long term are not what we thought they were going to be. And let's take a look at what has happened after Monday spikes settled down Wednesday night. Google's Alphabet Tech and ticker current stock price is $191.33 per share, which is a 7.29% loss. Their dividend shares are about 20% a quarter, which is about 80% a year. So 4 times a year, you'll get 20%. That's like mom handing you a quarter when you go to the grocery store and she tell you, go get yourself some candy. Don't shit cost no quarter. Fuck I'm gonna do with a quarter. He ain't even giving me a quarter. You're giving me 2 dimes, which is actually 10 dimes less than 6ix9ine when he dropped all them dimes in the courtroom. I'm just saying. Shade. Now, the current stock price shares $7.11, which is a 44.81% increase, but they still do not have any dividends. So this is Big Bear. That's at $7.71 of shares. But again, if you're looking at buying a stock, holding it for a while and then selling it for the inflated price and reap your rewards down the line, this is a good one to get into. Navita, their current stock price is $124,083, which is 5.21% increase. They have a dividend share right now of 1% per quarter, 1 cent per quarter, and 4 cents annually. Up next was Marvel Technology, which current stock price per share is about $116.46, which is $6.17 increase, where they still have a $0 dividend payout because Marvel does not pay dividends. And Vertiv Holdings, also current stock price of $119.04 with a 7% increase, does not give dividends. Now, Palantir Technologies, PLTR, the one that sparked this conversation a couple days ago by DJP1, who was so excited about the 22% after the market closed. The current stock price per share is $101.36, where he was quoting it a little under $100, which is about $86 when he was talking about it. Then they had the 20% increase, so it went up to $100, a little over $100, but now it's at a 2.38% decline over the past 24 hours, where dividend shares of PLTR are still $0 because they also do not pay dividends. Now, I gave you 2 or 3 REITs that pay monthly dividends, but we're talking about stocks that don't pay dividends at all. And the percentage increases from month to month are not significant enough for you to buy in now and cash out later. Tempest AI is another one that we talked about today, where their current stock price is about $69.18 a share, which is an $11.85 increase, but they also have $0 dividend payments. And we could keep going, but these are, I think, the 5 or 6 ones that really stood out this past 7 days. Now, the surge in AI stocks is largely attributed to increasing spending on AI infrastructure by major tech companies and growing investor enthusiasm for AI-related technologies. The overnight spike in tech stocks can be thrilling, but also terrifying, as they can bring about immense opportunities for growth, but also significant risks of loss. Because if you did a cover call and the market's going south and you're thinking, yay, I'm going to make sure that everything's going the way it's supposed to go, and then all of a sudden it shoots in a different direction. And how you just sold your stock because that's what you set it up for, or in other cases you bought somebody's stock because that's what you set it up for. You were trying to get the principal, the premium, as you bet against the market, and the market did the exact opposite of what you were hoping it was going to do, and it sent you into a spiral because sometimes you can't get rid of it fast enough. The volatility and unpredictability of the tech stocks make them a high risk, high reward investment, and it's essential to approach them with caution and clear understanding of the risks. I'm going to keep telling you this because if you remember the factors that drive the growth of the technology and the stocks and the innovation and the technological advancements and any major partnerships that are playing a role in this situation, you as an investor can make more informed decisions and capitalize on the potential for growth in the tech industry. So, for those of you who have made it this far, I want to really appreciate you guys for walking down that very extensive path when we're talking about how stocks are changing and increasing, and bull markets are rearing their ugly heads as we sleep. And I'd love to hear from you guys. If you guys put some comments down below, special shout out to T Fireballs. And you can tell me what your favorite tech stock is, and if you have had the experience with overnight spikes. I want to make sure that I remind you guys that if you like and subscribe for more content, you guys will be able to experience a lot of the information that I stumble across in buying and sharing and investing, as well as business opportunities that can make me successful, which I can tell you to make you successful as well. It's almost like free advice, you know? So I encourage you guys to make sure that you tiptoe over and hit that like button. Make sure that you follow me. Make sure that you guys are mashing those heart buttons while you're watching. Throw a few gifts and special thanks and special appreciations for being able to get informed information from a much reliable source. Remember that we are going to be live 7 nights a week, where we typically tee things off right around 10 o'clock Central Standard Time, which is 11 o'clock Eastern Time, which is 7 o'clock California time. And I definitely encourage you guys to take a look at what we have coming up, because we do still have to set up the rest of the weekend, because we just got information about the dismantling of the educational system. So I'm going to want to look in an in-depth discussion as to how the dismantling of the school system is going to affect the school system, and what we as parents have to deal with coming soon. Now, that show that I told you guys about investing in your educational facilities, because they're non-taxable entities, which means that donation is tax deductible on your taxes, especially if you get a voucher from the school. Now that they're tearing the school system down, depending on what they do, you're not going to have as much accessibility to non-private schools, because everything that was changing during the campaign was allowing the rich to get richer. So we're going to be talking about all of that tomorrow. So I want you guys to make sure that you stay tuned, and also make sure that you guys pay attention to what we're going to be adding to the show over the weekend, because we are live 7 nights a week. So if you're on a YouTube channel, we have not gotten to the rest of the week yet because of all of the stuff that we've got lined up. However, I do encourage you guys to make sure that you come and see us every day of the week, because you will learn something from us every time you show up. So that's all the time that I have for you guys for today. I am clearly burnt, because I was actually doing this research all afternoon to try to make sure that I had all of the information that DJ1 had brought us while we were on the show on Monday, because I want to make sure that I stay informed, and I want to make sure that I continue to provide all the knowledge that we need to be successful. Anyway, as I wrap things up, I want to say, ladies, as long as the situation doesn't make sense, I'm going to keep asking you ladies to please make it make sense. So ladies, please make it make sense. Fellas, I really appreciate you guys coming to the show and showing us support. We are still doing an excellent job with maintaining traction with the male population, and females are starting to get in line. So I really respect them and appreciate them. So special shout out to the ladies, but special shout out to Red Void, I'm the 81, Max Opposer, Joe, TF Fireball, Blue Lightning, Reese Martinez, for all of you guys that are showing us love on the podcast on a weekly basis, root us. I really appreciate you guys. Thank you very much. As I've said on a regular basis, thank you for coming to This and That. I'm your host, Xander, where we talk about this, that, and everything in between. Stay tuned for Higher Ground, which is our custom theme song for This and That. That was created by Alanito, a live band in Switzerland. So I really appreciate them for making us podcast songs. Hopefully I can debut on WWE and get my ass kicked as this intro song. That is on my bucket list. Hopefully it's not the spear. Well, hopefully it's probably better to get the spear than it is to get the super kick in the face, but pedigree probably would be better because that's less impactful. I could even see myself taking an RKO. I still feel like Travis Scott, I have an open challenge for Travis Scott. I kind of want to take his hardcore title. So I'm still putting it out there. Travis Scott, and me and you at the next pay-per-view event. Open challenge. He ain't got to know how to wrestle. He just got to know how to take a shooting star press. And I have to know how to pay somebody to do the shooting star press. But that's where we are. So again, I appreciate you guys coming. Oh, and if you guys know Travis Scott, if you're following him, make sure you tag him. Tell him This and That challenges him for his hardcore title. That's how we network. That's how we network. For 2024, we said Chris Brown first sight. And 2025, we're saying Travis Scott hardcore 24/7 challenge. First sight. So as I step out, I really appreciate you guys one more time for showing up to the show. Make sure that you guys like and subscribe, and we will see you guys tomorrow night.
Chase validation, now I validate myself. Building inner strength, putting doubt upon the shelf. No more unnecessary drama, no more wasted time. Climbing higher, constantly making my own climb. My network is my net worth. Choose your company wise. Surround yourself with eagles, not with sheep in disguise. Every interaction is a reflection of my brand. Quality over quantity, that's my personal command. I'm not mounted on higher ground where excellence is found. My potential knows no bounds, raising the bar, breaking ground. with surgical precision.